What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen, founder of Wolves of Investing. If you want to learn how to achieve financial freedom through investing, be sure to click the subscribe button and the notification bell. Today, I'm going to be going over my monthly M1 Finance portfolio review for April 2020. Currently, we're in this COVID-19 bear market and economic downturn. I know it's really hard to think about investing and finances at this time, and I hope that you all are staying safe and healthy. I'm keeping you guys all in my thoughts and prayers, and I hope you're doing the same for me. But without further ado, let me get right into the portfolio. What's up, everyone? Here's my M1 Finance portfolio for April 7th, 2020. My portfolio value is $687.79. My all-time return since August of 2019 is negative 18.30%. Over the last month, since March 6, 2020, my return is negative 8.53%. Like many other long-term investors, my portfolio has definitely taken a hit from this COVID-19 bear market. But as a long-term investor with 10 plus years before I need this money, I still definitely see this as a buying opportunity. As I had mentioned before in previous videos, my strategy for this portfolio is to invest $20 a week when the market is at all-time highs. And as soon as the market drops 20% and goes into a bear market, I would increase my investments to $40 a week. So let's go take a look at the activity. Here you can see before the bear market hit, I was investing $20 every week. And on March 16th, when the bear market was in full effect, I increased that to $40 every week. This is the fourth week of the bear market, and I intend to keep investing $40 a week until the market gets to within 5% of its all-time highs again. With this strategy, I don't need to worry about trying to pick the bottom or figuring out how long the bear market is going to last. It could last 10 months. It could last 10 years. All that matters is that I have a solid emergency fund, that I continue to have income, and for me that means not losing my job, and lastly, that I don't need this money for the next 10 years. As long as those three things stay intact, I'm going to continue implementing this strategy. Now, let's take a look at the portfolio. These are the 11 stocks that I have in my portfolio, and these are the all-time returns. Amazon is still doing very well. With the shelter-in-place order, Amazon doesn't really have a brick-and-mortar presence, so it makes sense that their stock is doing very well. They're a very well-run company. While people are staying at home, they're still ordering products. They're still watching Amazon Prime, and it's very likely that Amazon's going to make it through this bear market. Next up is Moody's. I'm a little perplexed at why Moody's is doing so well. We're in a pandemic, and in an economic downturn, I would expect a company like Moody's, that is a credit rating agency for companies, I would expect it to actually be beaten down. So, a little confused why Moody's is doing so well, and I wouldn't be surprised if it gets knocked down in the coming months or year. But they did survive the Great Recession, and I expect them to also survive this current economic downturn. Beyond Meat. This is a company that I just added on this week. I've been looking at Beyond Meat for several months now. They IPO'd last year, and as many of you may know, their stock shot up. They were one of the best performing IPOs of 2019. I believe their pre-IPO price was about $25. Their first day IPO ending price was around $60 to $70. Their stock shot up beyond $200, and now their stock is around $65. I thought this would be a good time for me to get into the stock. This is a company that I believe strongly in. I think they're going to be just fine 10 years from now. I believe that making great tasting plant-based meats is going to be a mega trend. And I believe that Beyond Meat is currently the leader. And I believe that they're going to continue being the leader. Now, I'm definitely not a vegan, but I will say that Beyond Meat, at least in my opinion, tastes really great. When I purchase a stock, one of the first things I want to ask myself is, do I really know what the company does? And I will say, as a customer of Beyond Meat, I totally understand what their product is, and I totally understand how they make money. That's not the only reason I buy a stock, though. As an investor, I want to make sure that I'm not overly biased based on my own opinion. One way for me to check that I'm not being overly biased and putting too much weight on my personal opinion is to check the financial statements. Taking a look at the 10K statement, the net revenues have grown tremendously from 2017 to 2018 and 2019, and I'm expecting those sales to continue growing very strongly. Another thing to check is that the net loss is steadily decreasing. I'm expecting in the next couple of years that the earnings per share is going to be positive. I don't know when that's going to happen, but it looks to me like it's probably going to happen in the next couple of years. Turning to their balance sheet, Beyond Meat currently has just under $276 million in cash and cash equivalents. And if I look at the company's debt, they currently have just under $20 million in long-term debt. So I think that even in this economic downturn caused by COVID-19, I think that Beyond Meat has enough cash to weather this storm. Next up is Illumina. I'm not really worried about Illumina. They are actually at the forefront of this fight against COVID-19. Scientists are using Illumina's products to help them find a vaccine for COVID-19. So I think Illumina is going to do just fine through this bear market and through this economic downturn. MasterCard, they survived the Great Recession. I don't really have any reason to believe that they won't be able to survive this economic downturn. Xilinx, they make FPGAs. I don't really see COVID-19 directly affecting them too much. I think they're going to make it out of this bear market just fine. Broadridge Financial Solutions, any publicly traded company that wants to be compliant pretty much has to use Broadridge Financial Solutions. So I don't really see their company going away anytime soon. I think they're going to make it out of this economic downturn just fine. Republic Services, great company. They collect trash in my particular neighborhood, and in every city or county where they collect trash and recycling, they pretty much have a monopoly in that area. So far during this downturn, I haven't seen them not pick up my trash. I have not seen them not pick up my recycling, and they continue collecting my monthly bill, and they continue to collect monthly bills from residents. So I don't really see them getting hurt too badly from this economic downturn. The last three companies on the list, The Trade Desk, Paycom, and Floor & Decor Holdings, those are three companies that I'm going to have to look at very carefully. One thing I ask myself when I'm looking at a company to own is, where will they be 10 years from now? Do I think they're going to be around 10 years from now? And do I think they're going to be making a lot more money 10 years from now than they are today? So these three companies, I do think that they will be around 10 years from now. And I do think that they will be making a lot more money 10 years from now than they are today. However, another question I need to ask myself, especially in this bear market, is, will they need to file bankruptcy? These three companies might be impacted by a serious economic downturn. The Trade Desk makes its money from advertising revenues. With many companies directly impacted by COVID-19, there could be a lot less advertising money going around. At least in the short run, this could be bad news for companies like the Trade Desk, including companies like Google and Facebook, both companies that I own in my other portfolios. So if I take a look at the balance sheet for the Trade Desk, I can see from their 10K that they have approximately $255 million in cash and cash equivalents. and they don't have any long-term debt. So just basing it off their balance sheet, I think they're going to be able to make it through this economic downturn. But it's just something I want to keep an eye on because their revenues might be seriously impacted from this economic downturn. Another company I like, Paycom, makes their money from selling human capital management software to other companies. They have a software as a service business model. If a lot of their customers go out of business, that would be a serious hit to their sales. Looking at their balance sheet from the 10K, the company has approximately $134 million in cash and cash equivalents. And they have approximately $31 million in long-term debt. Based on this, it looks like the company should be able to weather a serious economic downturn for at least a year, maybe even a couple of years. So I'm not too worried about Paycom, but I do want to continue monitoring the situation because there could be a serious hit to their revenues depending on how deep and hard this economic downturn becomes. And finally, Floor and Decor Holdings. This company specializes in hard surface flooring, including tile, wood, laminate, vinyl, and natural stone. With the initial unemployment claims at approximately 10 million people in the United States, I think we're going to see a lot more people delaying the purchase of new flooring for their homes or for their businesses. Upgrading the flooring in your home could cost $10,000 to $20,000 or more. With this economic downturn, I think a lot of people are going to forego upgrading their floors and saving that cash until the economy recovers. Looking at their balance sheet from their 10K, we see that Floor and Decor Holdings has approximately $27 million in cash and cash equivalents, and they have total debt of approximately $143 million. They don't seem to split out their long-term debt from their current debt. So if you look at this footnote number 4, it says that total debt consists of the current and long-term portions of our credit facilities, as well as debt discount and debt issuance costs. I'm not really sure what that means. I really prefer to look at long-term debt. I want to dig a little bit deeper. So I want to take a look at their interest expense in 2019. And if we take a look at their interest expense, we see that their interest expense was roughly $8.8 million. Being that they have $27 million in cash and their interest expense for the year was $8.8 million, we can see that they have at least enough money to cover their interest expenses. I'm not too concerned about Floor and Decor Holdings right now, but I definitely want to keep a close eye on how things develop in this economic downturn. So that's all for today. I hope you guys enjoyed this video. If you did, be sure to subscribe to the channel if you haven't already and click the like button. I hope you guys are staying safe and healthy, doing all those things you need to do, practicing social distancing, washing your hands a million times a day. Thanks for watching, and I'll see you next time.